Welcome back to XRP On Moon, the channel where we bring you the latest XRP updates and insights that could reshape your investment strategy. Today, we're diving into a prediction that has the crypto world buzzing. Tom Lee, the renowned market strategist and co-founder of Fundstrat Global Advisors, has made a bold statement that XRP could hit a specific price by 26 April. While crypto predictions always come with a degree of speculation, Lee's analysis is rooted in historical trends, market behavior, and macroeconomic factors. For XRP holders, this is not just another number. It could be a pivotal moment that reflects investor sentiment, liquidity flows, and market timing. XRP has experienced extreme volatility over the past year, moving from regulatory uncertainties to significant adoption milestones. Tom Lee is known for his in-depth analysis of market cycles and has made high-profile predictions for Bitcoin and other major cryptocurrencies, earning both praise and criticism. His approach combines technical analysis with behavioral finance, examining historical price movements, trading volumes, and external triggers, including Ripple's strategic partnerships and ongoing legal matters with the SEC. According to Lee, market consolidation followed by breakout patterns often signals when a cryptocurrency is poised for a surge. Understanding these patterns is crucial for anyone holding or trading XRP, as timing can be everything. What sets Lee apart is his ability to consider both institutional and retail market behavior. He monitors activity from large holders, often called whales, alongside retail investor trends. When both groups exhibit similar market behavior, it can precede significant price swings. Essentially, Lee reads the cryptocurrency market like a complex orchestra, identifying patterns before the mainstream notices. His predicted price target, while not always explicitly published, suggests a level that could act as both a technical breakout and a psychological milestone for the XRP community. This is why the 26 April date has captured widespread attention. Investors are analyzing charts, comparing historical cycles, and monitoring regulatory developments to anticipate whether Lee's projection might come true. Timing is critical. Markets often move in anticipation of news or sentiment shifts, not after they occur. If Lee's prediction holds, the days leading up to 26 April could present both opportunities and risks for traders and investors. It's essential to understand not just the target price, but the underlying factors that could drive XRP toward it. Furthermore, XRP's movement is influenced by broader market trends, including Bitcoin's performance, Ethereum developments, and global investor sentiment. Tom Lee's forecast reflects his macro view of crypto markets, providing insight into how various forces interact to shape price dynamics. By examining Lee's reasoning, investors gain more than a simple price prediction. They get a window into market psychology and the mechanisms behind potential price surges. In the upcoming parts of this series, we will dissect the catalysts that could drive XRP toward this predicted level, evaluate risks that might prevent it, and explore how institutional interest and trading volume trends could tip the scales. By the end of this series, you'll have a comprehensive understanding of why analysts like Tom Lee are confident in their predictions while others remain cautious, and what it could mean for anyone invested in XRP. As we continue our deep dive on Tom Lee's XRP prediction, it's essential to understand the key catalysts that could drive XRP toward the anticipated price by 26th April. The cryptocurrency market is never isolated. Price movements are influenced by a mix of technical factors, market sentiment, and institutional participation. One of the most significant catalysts for XRP is Ripple's ongoing partnerships with global financial institutions. Ripple has steadily been expanding its network, connecting banks and payment providers through its on-demand liquidity (ODL) platform. This adoption increases real-world use of XRP, adding liquidity and creating more demand, which can have a direct impact on price. Another critical factor is trading volume and liquidity across major exchanges. High trading volumes can indicate growing interest and market momentum. Tom Lee and his analysts often look at the correlation between volume spikes and historical price rallies. When volume increases without a proportional rise in supply, it creates upward pressure on the asset. In XRP's case, observing whale movements, large holders who can significantly impact the market, is crucial. If whales start accumulating XRP in the days leading up to 26 April, it could signal that the market is preparing for a breakout, aligning with Lee's prediction. Technical analysis also plays a major role in Tom Lee's forecast. XRP has specific support and resistance levels that traders watch closely. Support levels act as price floors, where buying interest is strong enough to prevent further declines, while resistance levels represent psychological ceilings. Lee believes that XRP is approaching a period where it could break through these resistance levels, creating a momentum surge. Historical charts show that XRP often experiences consolidation phases before rapid price movements. By analyzing these patterns, Lee identifies likely windows for potential price spikes. Macro-level factors also cannot be ignored. Global economic conditions such as interest rate decisions, inflation trends, and regulatory developments influence investor sentiment and liquidity. For instance, any positive news regarding Ripple's legal battles with the SEC could trigger a surge in confidence, attracting new investors and driving the price up. Similarly, broader crypto market trends, particularly movements in Bitcoin and Ethereum, often set the tone for altcoins like XRP. If Bitcoin sees a strong upward trend, XRP could follow due to increased market optimism. Retail investor behavior adds another layer to the equation. Market psychology plays a critical role in price movements. When retail investors anticipate a significant price surge, it can create self-fulfilling momentum as buying pressure pushes prices higher. Tom Lee's approach combines both institutional activity and retail sentiment, creating a holistic view of market dynamics. Social media trends, trading app activity, and online sentiment analysis are all part of the data he considers. The timing factor is crucial. Tom Lee's prediction is not random. It is based on aligning multiple indicators that historically have preceded major XRP rallies between institutional accumulation, technical chart patterns, macroeconomic trends, and retail behavior. All signals point toward a potential price movement by 26th of April. While no prediction is guaranteed, understanding these catalysts gives investors a clearer picture of why analysts like Lee are confident and what to watch in the coming weeks. While Tom Lee's prediction for XRP by 26th April is generating excitement, it's equally important to consider the potential risks and obstacles that could prevent XRP from reaching the anticipated price. Crypto markets are notoriously volatile, and even carefully calculated predictions can be impacted by unexpected events. One of the primary risks for XRP remains regulatory uncertainty. Ripple's ongoing legal battles with the SEC have been a constant backdrop for XRP's price movements. Any unfavorable news or delays in the legal process could shake investor confidence, trigger sell-offs, and disrupt the momentum needed to reach Lee's predicted price. Even minor regulatory hints can lead to sudden volatility, which is why traders must remain cautious. Market volatility itself is another significant risk. XRP, like other cryptocurrencies, is influenced not just by fundamentals, but also by sentiment-driven swings. Sudden spikes in buying or selling pressure can create sharp price movements that may not align with predictions. While Tom Lee's analysis considers historical patterns, the crypto market has shown time and again that unexpected global or sector-specific events can cause deviations from technical projections. For example, macroeconomic events like interest rate announcements, inflation reports, or geopolitical tensions can ripple across crypto markets, impacting investor behavior and liquidity. Liquidity is another critical factor that could affect XRP's trajectory. While Ripple's partnerships and institutional adoption provide significant support, liquidity gaps can create challenges. If large holders or whales decide to sell significant portions of XRP, it could temporarily overwhelm buying interest and suppress price gains. Similarly, low liquidity in certain exchanges can amplify volatility, making it harder for the market to sustain upward momentum. Lee's prediction assumes a relatively stable trading environment, but real-world dynamics may vary, which is why monitoring liquidity flows is essential for traders. Another obstacle comes from the broader crypto ecosystem. XRP does not operate in isolation. Movements in Bitcoin, Ethereum, and other major cryptocurrencies can influence altcoin performance. If the broader market enters a bearish phase, it could dampen XRP's price action regardless of internal catalysts. Conversely, bullish trends in the market can amplify XRP's movements, but the unpredictability of external factors adds an element of risk. Tom Lee's prediction is optimistic, but it requires alignment across multiple market conditions, not just XRP-specific events. Investor psychology also plays a role in creating risks. When predictions gain attention, they can lead to herd behavior, where retail investors rush to buy in anticipation of a surge. While this can temporarily drive prices higher, it can also create a bubble-like scenario where prices spike and then correct sharply. Traders need to understand the difference between speculative momentum and sustainable growth driven by adoption, network activity, and institutional participation. Misreading these signals can lead to losses even if the overall trend eventually aligns with predictions. Timing and execution are critical. Predictions like Tom Lee's focus on a specific date, 26th April, but markets rarely move in perfectly linear paths. Even if all positive factors are in place, short-term corrections, profit-taking, or unexpected news could delay or temporarily reverse the anticipated price surge. Understanding these nuances is key for anyone looking to act on such predictions. Risk management, setting stop losses, and staying informed about news developments are essential strategies for navigating this high-stakes period. Now that we've explored the risks and obstacles, it's time to focus on the potential upside for XRP as we approach 26th April. Tom Lee's prediction isn't just a number pulled out of thin air, it's based on a combination of technical signals, adoption trends, and market sentiment that could align to create a surge. One of the most important factors is network activity. XRP's blockchain shows patterns of increasing transaction volume, which often precedes price growth. Higher transaction counts suggest that the token is being actively used, not just held, signaling strong demand in the ecosystem. This real-world utility can reinforce confidence among both retail and institutional investors, setting the stage for upward momentum. Another critical driver is Ripple's expanding partnerships. The company continues to integrate XRP into cross-border payment solutions, allowing banks and financial institutions to use it for liquidity on demand. These partnerships do more than increase utility. They send a strong market signal. When institutions start adopting XRP at scale, it creates both legitimacy and demand, which are key factors that analysts like Tom Lee consider in price predictions. Historical trends show that when major partnerships are announced or gain traction, XRP has experienced noticeable upticks in price, often accelerating sharply over short periods. Technical analysis also supports the potential for a breakout. XRP has recently been trading near key support levels, consolidating in a range that historically precedes major upward moves. Lee's methodology emphasizes the significance of these consolidation phases. They act as accumulation zones where buying pressure builds quietly before a larger breakout occurs. If XRP can break through its identified resistance levels, we could see a rapid acceleration toward the predicted price. Trading volume and momentum indicators such as Relative Strength Index, RSI, and moving averages suggest that the market may be primed for such a move, assuming no unexpected disruptions occur. Market sentiment is another major upside factor. Social media discussions, trading app data, and online investor communities indicate growing optimism around XRP, particularly with Tom Lee's forecast in the spotlight. Retail investors tend to respond to positive predictions, creating additional buying pressure. When retail enthusiasm aligns with institutional accumulation, it can create a powerful surge that propels prices higher. This interplay between market psychology and tangible catalysts often underpins major cryptocurrency rallies. Institutional interest adds a further layer of potential upside. Hedge funds and investment firms tracking XRP's developments are likely to act when key technical and fundamental signals align. Large-scale buying by institutions can have a magnified effect, driving liquidity and confidence in the market. Combined with Ripple's ongoing adoption efforts, growing network activity, and technical breakout potential, these factors form a compelling case for the possibility that XRP could reach the level Tom Lee predicts by 26 April. Lee's prediction is anchored to a specific date because all these variables, network activity, partnerships, technical levels, and investor psychology, appear to converge around this period. While no forecast is guaranteed, understanding the combination of catalysts that could drive a surge allows investors to make more informed decisions. By carefully monitoring trading volumes, whale activity, and news developments in the days leading up to 26 April, traders can better anticipate potential price moves and act accordingly. Tom Lee's XRP prediction for 26 April, it's time to consolidate everything we've explored and provide actionable insights. Throughout this series, we've analyzed the catalysts, risks, technical indicators, and market sentiment that could influence XRP's price trajectory. Tom Lee's forecast is not just about hitting a number. It's about understanding the complex interplay of adoption, network activity, institutional involvement, and investor psychology. Each of these factors plays a role in shaping the market, and when they align, the potential for a significant price movement becomes much higher. One of the most compelling aspects of Lee's prediction is Ripple's continued expansion and real-world adoption. As banks and payment providers increasingly integrate XRP for cross-border transactions, the token's utility and demand rise in tandem. This adoption is complemented by technical signals, consolidation zones, resistance levels, and trading volume trends that suggest XRP may be poised for a breakout. Historically, when XRP has experienced similar conditions, it has shown rapid upward movements, which reinforces the logic behind Lee's forecast. At the same time, it's essential to remain aware of the risks. Regulatory developments, market volatility, liquidity fluctuations, and shifts in investor sentiment can all influence XRP's path, potentially delaying or altering expected outcomes. While the market may respond positively to catalysts like institutional accumulation or bullish technical signals, unexpected negative events can create sharp corrections. For investors and traders, balancing opportunity with caution is key. Understanding both the upside potential and the downside risks allows for more informed decision-making. Retail and institutional behaviors will be particularly important as 26 April approaches. Whales, trading volumes, and social sentiment can create momentum that amplifies price movements. Monitoring these dynamics in real time gives investors a sense of how likely the prediction is to materialize. Additionally, macroeconomic conditions and broader cryptocurrency trends, including Bitcoin and Ethereum, often set the tone for altcoin performance. An overall bullish crypto market can provide the tailwinds XRP needs, while bearish conditions could suppress even the strongest internal catalysts. Tom Lee's XRP prediction represents a convergence of technical analysis, market psychology, and fundamental adoption. While the forecast is optimistic, it's backed by a detailed study of patterns and indicators that historically influence price behavior. By understanding both the opportunities and the risks, investors can approach the market strategically rather than purely speculatively. Timing, observation of market signals, and disciplined risk management remain essential. The information presented in this video is for educational and informational purposes only and should not be considered financial or investment advice. Cryptocurrency markets are highly volatile, and past performance is not indicative of future results. Always conduct your own research, consider your personal financial situation, and consult a professional advisor before making any investment decisions. Neither the creator of this video nor this channel assumes any responsibility for losses or gains resulting from your trading or investment actions. By keeping these principles in mind, XRP investors can navigate the market more confidently as 26 April approaches, understanding both the potential upside highlighted by Tom Lee and the risks inherent in the cryptocurrency space.